Let's turn now to what's going to happen with the trade here on the home builders. And maybe, Guy, I'll start with you on this. If you take a look at the way things have moved, the sentiment numbers, as Diana alluded to, had tariffs front and center. Do we think that there is a plateau building for home builders?
Before we even get into it, welcome. We're a welcoming
It's good
show.
to be back with you guys.
So welcome, Tom. Am I right, Dan?
100%, Guy.
Appreciate that. I think it's a big deal. I think tariffs are the headline. Interest rates, though, are probably the real plot. And when you look at the Toll Brothers, average selling price is now down 8% year over year. So in my opinion, higher rates are starting to have an impact. And you look at this stock, I mean, the move we've had since November has been significant. And to me, it's not about EPS. It's not about if these stocks are expensive, it's cheap. What do you think about the employment picture, and what do you think about the rate picture? I think the employment picture is going to deteriorate. I think rates are going to go up. So almost by definition, you can't own these. Now, if you put a chart up, you'll see 110 or so was the level that we bounced from in July of last year. That should be support. That's probably where we're headed.
Yeah, it's worth noting, though, it's not just obviously home builders, it's also the autos, right? And so they're facing this headwind of potential, tariffs here. And if you go back and, Guy, we're just calling up charts here today, aren't we?
Well, we do.
Let's look at the GM chart for a second. It doesn't look too different than where Toll Brothers topped out, too. It was late November. So lots of sectors rally over the enthusiasm about a pro-growth sort of agenda by the new administration. But I think, first and foremost, I think tariffs have basically taken over like the story here as it relates to our economy. And that's the sort of thing where you talk about the S&P, you talk about the Dow making new highs. At some point, these sectors that face these headwinds are going to weigh on S&P 500 earnings, even if it's just indecision, right, whether it be from consumers or it might be indecision from companies and the CEOs and how they choose to spend their money on R&D and CapEx.
Julie, if we talk about the fundamentals of the housing market, this is a key point in the overall scheme of the year and maybe even this market right now. It's the spring selling season. We're almost into it. How worrying is Toll Brothers and how worrying is the home builders trade if you look at it from that standpoint?
Well, I think for sure it's pretty critical that right now they get out there and be able to make up for the mistakes that they had. They reaffirmed their guidance, and so I think they have a certain amount of confidence. They have a certain amount of their inventory that's already bought and paid for and sold. So I think that their visibility is probably better than the average home builder. And also demographically speaking, they're better positioned because they're a higher end builder. I'm much more worried about, the lower end entry level building companies because I think they're even more economically sensitive. Exactly to Guy's point, the employment picture is what's really going to drive them longer term. That's what we really need to see. I think tariffs are something that can be an intermediate or short term headwind for them, but they've all been able to be pretty resilient in the face of that.
Hey, Carter, are any of these charts set up better than others, either one way or the other, if you could find some momentum or some carry through to the upside or down?
Well, it's a very homogeneous group, of course, and what we know is that they're all under pressure, and they all peaked as 4, 5, 6 months ago. In fact, the S&P 500 home building sub-industry group right now is down 30% from its peak in September. And you have a sort of a 1-2 setup that's not good. The one is that this group has doubled the performance of the S&P over the past decade, the past 15, 20 years, and now is underperforming. So when you have something that's been a massive outperformer that then starts to stall and roll over, all of these stocks qualify as bullish to bearish reversal sells, and the news out with Toll Brothers doesn't help the situation.